founded buy now, pay later company created in 2013 and is now present in New Zealand, America, after acquiring QuadPay, which is now called Zip over there too. By leveraging AI and leaping onto the buy now, pay later craze, Zip has positioned themselves competitively in their market. They offer multiple different lines of credit, the regular buy now, pay later in full, as well as recently introducing a personal loan up to $50,000 to their customers, who Zip acknowledge to be those that sometimes struggle with keeping up with the increased costs of living. Due to the target market, Zip implements a number of different strategies to ensure that the customers do not remain profitable and the company do not default and the company remains profitable. ASIC and the Ombudsman are the regulatory parties that are able to represent the users by creating laws to protect them from these risks. Zip is very transparent and acknowledges the fact that their customers are used by those in lower income households, with 40% of their customers being between 18 and 39. In their About Zip page, stating their products, it helps manage their finances, which includes selected reviews, all of which mention being on a budget and helping out with the increased cost of living. Even on their annual report, there's a glowing review stating that Zip always helps them out whenever they're in a pinch. On their annual report, Zip also mention bad debts and financial hardships and ways to improve identifying at-risk customers, which further emphasizes that Zip is aimed at those that would normally be declined or have higher interest with companies like a bank. They offer Zip Pay, which is a line of credit up to $1,000, which can be paid weekly, fortnightly, or monthly. The next is Zip Plus, which allows up to $8,000 with a minimum repayment of $20. Zip Money, which allows up to $5,000, which is a minimum repayment of $10, and they recently introduced their Zip Loan, which is a loan up to $50,000, which can be repaid in a predetermined rate from 3 to 7 years. They have also introduced a virtual Zip card, which is linked to Visa. Although the retailer of POS might not accept Zip directly, any merchant that can take Zip is now able to use Zip Visa card, which increases their presence and, in essence, their revenue. The demographic, as Zip has mentioned in not only their website but on their annual report, is those that need a hand with managing their finance and are more at-risk customers. However, these customers still get instantly approved for these new lines of credit. This is due to the lack of information for the unsupervised AI programming that is unable to access the poor repayment history with other buy now, pay later companies. This also means that the AI model is unable to see if the customer has been in financial hardship, a key indicator of poor financial health, which has an increased risk in bad debts and a risk for the customers for default. ASIC, or Australian Securities and Investment Commission, and ACCC, Australian Competition and Consumer Commission, are the regulatory parties that ensure there are laws and practices in place to help Zip prevent these risks from occurring. The Australian Complaints Authority, or the AFCA, and the Ombudsman are also there to help advocate for consumers should they feel their complaints have not been heard or acknowledged by Zip. These parties are especially important for the protection and voice for consumers, as again, Zip has acknowledged that these are more at-risk customers. ASIC has been set in place to regulate lenders such as Zip to not provide loans that the customer is unable to pay off. However, ASIC states by law the credit provider must ask questions in regards to the customer's financial situation, and Zip must verify these to be true. Yet Zip uses AI to briefly check if the customer is able to repay these loans. This check does not include the repayment history of other buy now, pay later companies, making it easy to approve loans for at-risk customers. The ACCC is in place to reinforce ASIC's laws and acts. as the new credit act is handled by ASIC. Given the fact that they are only partially involved with the act, they do not handle the complaints, and it is hard for consumers to feel protected by the ACCC as they look more generally over the competitiveness of the market and the effects of that to the economy rather than the protection of the consumers. The Ombudsman and the AFCA, although not regulatory bodies, can help bring up issues brought to them by consumers to the above two regulatory parties to help adapt and update the new Buy Now Pay Later Act.